understand mutual funds. You're probably thinking, okay, get to the point. But you are in for a surprise. Why? Because I am really excited to give this presentation to the ladies and gentlemen in this room. Sit back, relax, and enjoy. Imagine you were at the beach and you were relaxing, looking at the beautiful water and sipping a pina colada. Sound good?
Yes.
Let's begin, and please enjoy the presentation. Kindly turn off all cell phones and beepers, please. Hold all questions until the end. Thank you. Mutual funds compared to stocks and bonds. There are stocks. Then there are bonds. But then there are mutual funds. According to Ticker.com, mutual funds are growing more popular and becoming more widespread in different parts of the globe, including India and Asia. Originated by John C. Bogle from the Massachusetts Investment Trust, the first mutual fund celebrated its 80th birthday on March 21, 2008. As indicated on a short history of the other MIT at economicprinciples.com, Bogle's fund, which was comprised of 200 shareholders totaling $392,000 in assets, is now worth a staggering $15.9 billion. Keeping a long-term goal in mind, mutual funds are the best investment strategy considering mutual funds allow investors to diversify their exposure in the market, allow for professional analysts to manage investments, and offer varying levels of volatility to meet all investors' individual goals. One definition of diversification is, don't put all your eggs in one basket. Experienced investors know that this is a very important part of investing. Diversification. Basically, to diversify means to have a lot of different exposure in the market. You can get a little bit of everything when you invest in mutual funds. The overall stock market has averaged a return of 10% per year since 1929, as stated on ICMark.org. During that time period, many companies have gone out of business. Based on this, it is important to protect yourself by purchasing many stocks, not just one. For example, if your portfolio had only one stock in it and that company went out of business, the value of the entire portfolio would be zero. If I wanted to diversify my flower garden, I would choose a variety of flowers including sunflowers, lilacs, lilies, roses, petunias, and daffodils. By holding a portfolio that is diversified, you ensure that no one company will determine the success or failure of your total return. Mutual funds also allow professional analysts to manage investments. Professional analysts can manage these funds by using certain investment strategies, or they can simply replicate an entire index like the Standard & Poor's 500. Since the S&P 500 is actually used as a benchmark by fund managers as well as individual investors for consideration and performance, it may actually be easier and more profitable to invest in an index fund. Tracking the S&P 500 for the past 50 years, the index has increased over 400-fold. As a result, buying a mutual fund that tracks the S&P 500 would have resulted in significant gains. One way to decide which mutual fund to own is to measure how much volatility or risk tolerance an investor is willing to expose him/herself to the overall market. This will depend on how much risk you, as the investor, is willing to stomach. The levels of risk range from low, moderate, and high. A higher risk mutual fund might have higher gains in a bullish market, while a lower risk mutual fund might perform better in a negative trending market. One must decide what level of volatility they are comfortable with before deciding which fund to invest in. In the last 15 years, stocks have been the most favorable asset class for investors. Since mutual funds are a collection of many stocks, this is good news to investors. Medium, high, or low levels, what will you choose? Which fund should I own? Ask yourself these simple questions. Measure how many volatility the fund has. How much risk do you want? What level of risk is best for you? Conclusion, I am almost done. Knowing how mutual funds have performed against stocks and bonds, mutual funds will become even more popular, especially considering all of the economic troubles of late. The first of 3 reasons for investing in mutual funds is called diversification. Diversification allows investors to have diversified exposure in the overall market. The second reason for investing in mutual funds is the satisfaction that comes with knowing that a professional manager or managers are making all of the important decisions. Finally, mutual funds are appropriate for every investor. Regardless of risk tolerance, there's a perfect match. By selecting their own level of risk, investors can relax and feel comfortable with their decisions. Overall, mutual funds have many advantages and remain the best long-term investment choice for investors. Why invest in mutual funds? 3 simple reasons. Diversification allows investors to have diversified exposure in the overall market. The satisfaction comes knowing that professional managers are making all of the decisions. 3. Mutual funds are appropriate for every investor. Mutual funds remain the best long-term investment choice for investors. Before I end this presentation, we will say mutual funds best asset class on the computer count of 3. 1, 2, 3.
Mutual funds are the best asset class.
This presentation is now over. I hope you all had a great time watching. Thanks for being a great audience.
I had a lot of fun watching her develop this because she definitely did a lot of slides. One thing that you should all know too is the way that I approached this with them is I gave them they had their essays, and I gave them a blank piece of large paper and made them create storyboards of all the important parts of their essays that they wanted to basically stress in their PowerPoint. And it's completely all done on their own in terms of the things that they felt were the most important. And I really think they did a really nice job at isolating all those things. So very well done.